Sephutile Mhlongo. I am currently the Manager of Financial Regulation and Supervision with Digital Frontiers, and I will be moderating this session. This session is being live interpreted into French. If you wish to listen in French, click the language button at the bottom of your soft card. This session is titled Supporting Innovation for Climate Resilience, and I'm joined by Musheer Ahmed from FinStep Asia and Viola Chelang'at from Capital Markets Kenya. Thank you for joining us, and I'll just hand over briefly to Musheer to introduce himself, and we'll be followed by Viola.
Thank you, Sephutile, and thank you to the Digital Frontiers for having me and Viola here today. I am a founder and MD of FinStep Asia, which is an advisory firm based here in Hong Kong. We look at providing advisory on fintech, green finance, as well as digital assets to large corporates, regulators, and startups. Currently, I'm also an external advisor and consultant to the Bank for International Settlements Innovation Hub, where I'm leading their project on green finance. Thank you for having me, and I look forward to the discussion.
Thank you, Sephutile, for also having me in this panel alongside with Musheer. I'm a Senior Product Development Officer within the Capital Markets Authority, Directorate of Policy and Market Development. And my role at the Capital Markets Authority involves product development and structuring, product uptake by engaging supply side and demand side stakeholders to leverage existing capital markets products and services, as well as fintech and innovation. My background is in finance, investments, and also development finance, and I am delighted to be part of this panel today. Thank you.
Thank you both. So as we kick off our discussion today, I'll just start off with Musheer. Can you share what is the landscape of climate resilience in your context? Expanding on what are the emerging trends around climate tech, and what is climate tech?
Right, thanks for that question. And it's also an interesting question in terms of landscape, right? When we do look at how climate tech has evolved, I guess we got to look at how climate impact is being measured and reviewed globally. So step one, I guess, is the element of green finance maturing over the last few years and having sustainable bonds and other elements becoming front and core, not just for sovereigns, but also looking at what large corporates are doing, right? Now, investors also need ESG ratings to be attached to different bonds to understand their impact. And some investors and asset managers are also refusing to support any carbon intensive project, let's put it that way, right? Over a period of time. So when we look at that landscape, what we have seen is that the climate tech landscape has evolved from being largely about elements of reviewing whether a project is green or not, to now having elements of IoT devices, which is Internet of Things, essentially sensors and other technology elements that can provide real-time data or at least periodic data on different elements of different green projects. This could also be used for measurement of carbon emission in different places. That's number one. Number two is an element where you're seeing a mix of fintech merging with climate tech, in where you are seeing certain providers being able to not only measure somebody's carbon footprint, but also offering for that to be offset at the same time. So some companies are able to offer this at the checkout. So say, they will measure your carbon footprint of anything from airlines, which you usually had an offset button added to your checkout when you're taking a ticket saying this is your carbon footprint. Do you want to offset that? To now companies who are actually going to review your bill, even it could be for clothes, it could be for groceries, anything there, and then offer the offsetting element, right? So that charge of a few dollars could be added to your offsetting. So this is a good part. But what then happens is then they go and find or are in partnership with green projects, which then needs to be measured and validated. So that's where the third part comes in, which is looking at blockchain in terms of the identity element of, in terms of transparency of different projects that are taking place, whether they are following what they're committed to, whether these are actually original, this is not double counting, etc., so that the investors or even retail consumers are getting the accurate impression and are paying for the right things, right? So these are three main things that we're seeing. As a culmination of that, now you're seeing newer models coming up, which are combining carbon credits and looking at how carbon credits can be traded on different exchanges, be it tokenized through crypto or otherwise, but also just providing an access for a vast majority of those who are looking at voluntary carbon credits to avail of services on exchanges. I'll pause here. Your next part of your question was, could you just, if you don't mind, could you quickly repeat that for me, please?
Okay. So it was, so you were just explaining the landscape and the trends around that are emerging around climate tech. And I think that's what you were covering now, speaking about carbon credits and tokenization. I think it was just to provide context as to what exactly, when we say people are familiar with fintech, but what climate tech seems like a new term.
Yeah, I think also when you look at fintech, right, it's a new, almost a new wine in old bottle, as they say, because it's technology underpinning financial services. It's been around for many decades, but now because it becomes a function that is having a radical impact at the consumer end, you start talking about it more as a terminology. The same way with climate tech, Internet of Things, sensors, a lot of these things, carbon credits for that matter, have been around for at least 2 decades, if not more. But what we are now seeing is action being taken on large scale globally, right? And the need in particular of investors and governments on two sides. One, governments having the need to fulfill their carbon mitigation goals, while investors having the need to ensure that they are investing only in green projects or have a certain quota of green elements to that, is influencing climate tech development, right? So you are seeing a lot of money going in. Quite a few VCs and investors are also looking to invest in climate tech because they have a strong sense of connection with environmental sustainability. I would say some of the places where you have seen good innovation come out, the Nordics are quite clearly, the Scandinavian countries have quite clearly been leaders in climate tech, from a variety of different elements that are used, from solar energy plants, wind plants, and then being able to not only transmit the energy that's generated through these projects, but also being able to create grids that can share this energy, making it more impactful locally, right? So that has now translated to other regions picking up. And I expect that in the next 3 to 5 years, you will see most of the regions of the world having strong climate tech startups coming up, because the VC investments have been happening over the last couple of years and increasing in the coming year, which would then take that 2 to 5 year timeline for the startups to develop into major, startups which can deliver as corporates. Yeah.
Okay, thank you. I would just like to stop there and switch to Viola. Still keeping with the different tech that exists. So, you come from a regulatory space where there's a lot of literature that suggests RegTech, regulatory technology, can ease the burden of climate risk management. I've heard from a more innovative VC funding perspective. So is this something, in your experience, that has been adopted in Kenya, and how has it been working, if it has?
Okay, thank you very much, Sephutile, for that question. First, we all agree that financial institutions and market intermediaries can make their own contributions towards overcoming challenges of climate change through implementation of technologies such as regulatory technology, as well as supervisory technology and climate tech, as Musheer has put it. So in terms of the capital markets, Kenyan capital market space, we've implemented what we call a risk-based supervision system, which is a form of regulatory technology which aids market intermediaries and listed companies, as well as approved institutions, to file their financial and risk-related regulatory reporting requirements on a regular and periodic basis. So by that, we are able to comprehensively assess the level of risk with regards to ESG and sustainability-related risk, as well as climate-related risk. The RegTech system also facilitates automated receipt of license and approval application, as well as conduct risk profiling for different market stakeholders, undertake risk analysis, and also support in the process of complaints handling and investigation. And in terms of now the specific RegTech solution in the Kenyan capital markets, through the regulatory sandbox platform, we've been able to successfully test and admit, as well as exit RegTech and data analytics platform by Innova. Innova is a local technology partner for market intermediaries, offering secure cloud and web-based RegTech and data analytics solution that supports financial and risk analysis of securities and funds. So specific now to how CMA uses RegTech to evaluate ESG and climate risk, we look at first how the company strategy promotes sustainability, and whether boards have also adopted processes to ensure oversight of sustainability, ESG, and social related risks, as well as for market intermediaries, we ensure that they comply with the stewardship code that ensures that ESG is factored in the investment process. And maybe globally and also regionally, what we can learn in terms of using and adopting RegTech to monitor and ease climate risk, financial institutions and issuers of securities can put in place or institutionalize a climate risk enterprise strategy within their existing ERM framework, and then also put in place a RegTech adoption framework for climate risk management, assessment, and also identification criteria, as well as also leverage on existing RegTech solutions that can be extended to manage climate risks. For example, existing avenues for regulatory reporting, like in the case of CMA Kenya, the risk-based supervision system. And then also there is need for increased participation in green financing by issuers of securities. Thank you.
Thank you, Viola. You've touched on some very interesting points there, speaking to how RegTech is used for starting off with risk profiling all the way through to talking about data, as well as collaboration, which is where now you're leveraging different systems. And I'd just like to follow up before I go on to the question on SwapCard, to follow up on what you were speaking on, which is you touched on the regulatory sandbox, the solution, the RegTech solutions, and the sandbox, your sandbox experience. And there's a local company, you can correct me if I'm wrong here, but there's a local company that's piloting a data analytics solution together with the with the regulatory entity. Now, there's a lot of conversation around data, and in those instances, like who owns the data, how's the data managed, and data governance. Could you share a bit more on that?
Okay. Thank you very much, Sephutile, for that question. In terms of the issue around data and data governance, how we've approached that is first by putting in place an appropriate data reporting framework that embodies environmental and social governance. So this ensures that periodically, even as we collect the respective financial reporting data, we are also able to focus on environmental, social, and governance issues in terms of business strategies and decisions of market intermediaries and listed companies. And then the other element that we have done to track that data is making ESG reporting and data accessible. This way we are able to encourage issuers of securities to make their ESG reports and performance data available and accessible for tracking progress. And then also there is an element of collaboration between the regulator and also issuers of securities to furnish data and information on ESG to credit rating agencies so that they are able to rate these issuers of securities and inform an effective decision by either funders or even investors that seek to leverage on this kind of information and the data to make a decision.
Thank you. There's a question from the audience that's come in, and perhaps before I even go into the question, you were speaking to ESG reporting and the standards and the systems that have been put in place into that. And Musheer, you spoke earlier about your experience in Asia, the landscape and the environment. And in my head, how these things work, or how it processes is, on the one hand, there's the need to put standards in place and systems. And then on the other hand, we have Asia, which seems to be a bit more further ahead and is already innovating and has already innovated, So this is something that I'd like to come back to. But before that, maybe I'll go into the question which asks, what are the challenges? And I think this is more for you, Musheer. What are the challenges facing climate innovators, startups, and what solutions have they employed, especially regarding funding?
I think funding isn't as much of a challenge as it was previously. As I mentioned, I think in this current economic environment, one of the key critical areas of focus is climate change and environment sustainability, right? And that goes across different industries. Keeping that in mind, even if you don't necessarily may not have the same level of VC funding, you will end up finding funding from the large corporates, their corporate VC ventures, or it could be government grants, etc., that are being given in large chunks, right? So there are many cities or countries who are offering special subsidies or grants for organizations or startups who are building sustainable products, right? Or building technology that can help with sustainability. Tokyo is a classic example. Hong Kong is another example where you are seeing this progress. So I think funding isn't much of a challenge. Where I see a challenge is with regards to data, and I think that's something that Viola was also talking about. The data and consistency of data and the reliability on the data becomes very critical, because a lot of decisions in today's world are based on data, right? Data is the new oil, or nuclear power, as another friend of mine who's a regulator has also said, which is the key element, that if you don't get consistent data in terms of capturing the data and then being able to translate and showcase dashboards or use that data for making different decisions, be it bond rating, be it decisions when it comes to your investments, or it could be a simple decision as how I use my resources or my devices, right? That becomes very important for a variety of different participants. However, because the standards are not as universal as you mentioned and touched upon, I think that's a key challenge that a lot of people are facing. Secondly is, when we look at the technology being used, it's varied in different parts. So being able to have interoperability of different technologies and to smoothen the process of transmission of information, I guess, is going to be a second challenge that most startups are going to face, irrespective. You could go down the blockchain way, or you could go down the traditional non-blockchain way, and you still have similar issues where you want to make sure it's interoperable. Thirdly is, as an extension of that slightly, when you look at new tech companies or newer businesses versus large corporates or even banks for that matter, one of the struggles you see is legacy infrastructure versus modern infrastructure, right? And being able to, for startups and innovators in particular, they can build great APIs, they can build great interfaces, and as well as great technology. However, when they need to integrate with a large corporate or old economy companies, quite often the legacy systems are not compatible or have low compatibility, which then becomes a hurdle and a big challenge to overcome, right? So that would be the third one. And number four, this is purely from a startups working with corporates perspective, is governance and onboarding time, right? And this is not to do with KYC or fintech, etc., but typically that time frame can be many months, right? And a lot of startups have funding or runway, as we typically tend to interpret or call it, for 6 months to a year. If a corporate or a government enterprise is going to take close to a year to onboard somebody, that becomes a challenge for that startup to survive, right? So we need a shortening of that onboarding process, of course, keeping in mind all governance and due diligence taking place. But if that can be reduced to 3 to 4 months, that would be great for these startups. And that's a challenge that I do see that governments are trying to improve on that, as are corporates, but that still will take some time, both the legacy technology and the shortening of onboarding. Thank you.
Thanks, Musheer. I'd like to hand over to Viola. Do you have thoughts on the question that was asked?
In terms of the challenges, I think Musheer has very well articulated the same, but I could just add on the issue around infrastructure and regulation. So we find that especially the climate tech startups in Africa, they face unfavorable regulatory frameworks, given that climate finance, climate tech is a new area of innovation. And most of these African countries are still trying to put in place the appropriate infrastructure. They're still trying to build capacity as well as enhance the skills gap. And therefore, we find that there is a lot of fragmented regulatory markets, therefore impeding them in terms of scaling their innovations. And then also sometimes we'll find that because there is lack of regulation, it can be very complex and therefore stifling these innovations to be implemented in the mass market. And then the other challenge has been the lack of regulatory incentives for climate finance and climate tech. And we've seen, like in the Kenyan capital markets, we've put in place incentives for issuers of securities that want to leverage on climate finance and other sustainable finance avenues available. And then the other challenge is on particularly trying to convince customers in the rural areas to switch from the traditional non-climate friendly options of, let's say, energy to more sustainable energy and finance. Thank you very much.
Thank you, Viola. Gosh, there's so much that you both touched on. I'm not sure which direction to take, but right. I'll just like to speak to what was briefly mentioned, which is the capacity, right? The skills gap that exists, you know, and like what has been the Asian experience versus the African experience? Like what are the skills gap that we're currently seeing in innovating for climate resilience that different stakeholders need to be mindful of, and maybe even young people need to explore, could be exploring as well? Oh, Jesus.
Viola, would you like to go first? I can follow up from an Asian perspective. So,
kindly just go ahead. Thank you.
All right, thanks. When you look at an Asian context, or in my opinion, 3 main skill sets that are a challenge, and this is something that's impacting across. The first one, which is technology talent and developers. I think there's a demand for technology talent and developers and engineers, IT engineers across different institutions, largely because unlike, say, 5 to 10 years ago, where the demand for these developers was more from technology companies, because of the digital transformation highly accelerated by COVID, a lot of old economy and almost all institutions now rely on some shape or form of technology for delivering their services or having an option of that. So that demand is significantly high. And so any climate tech companies or companies building something in green tech will need that technology talent, which makes it expensive. And that's a challenge that I feel everyone is facing and trying to overcome. For this, what is the need is more schools generating engineers, but also one of the things you don't yet see as often is engineers focused on environmental engineering. There are a few, not significantly large number of courses. I do hope, like we've seen more on computer science and others, we can have more courses on that end. That's number one. Number two is generally talent that can understand climate risk and climate impact, right? Both from a green finance perspective, In Asia, there are a lot of new models that are coming up, or evolutions of older green finance models that are being generated. For example, recently there was a conversation about how Hong Kong is going to need thousands of people or professionals to upskill themselves when it comes to renewable or sustainable buildings and the standards therein required for maintaining such in the in building management or property management industry. Right now, this is completely non-finance, but that's a big need that is there locally for as companies start upgrading to become green buildings, right, or sustainable buildings, or at least try to improve their current status to be non-carbon emitting, right, even if it's not carbon mitigating. So that understanding and knowledge to be able to implement in their work is lacking. And number three is are people who understand ratings or ESG elements that need to be incorporated in a way that it has real world impact rather than just technical impact. So having a balance of understanding of what's happening on the ground versus looking at regulations and policies to combine with is important, because you could have the theory, but applications, as Viola brought in a beautiful point about how you could have a great technology, but you need to incentivize people to take it up, because their cost of current fuel that they may use, which could be biofuel or wood or anything else, may be much cheaper for them, right? So in the near term, but longer term, solar may work better. But for that transition, you need people who understand the balance that's required for transition, and that I feel it will take some more time to develop, and universities need to work on it. But beyond that, you also need courses which are postgraduate or certificate courses or diploma courses where people can be trained on building not just organizations, but also understanding of sustainability across different metrics. Thank you. Viola, over to you.
Thank you very much. I think that was quite comprehensive. I could just add one more point around the issue of structuring sustainable products in the capital markets. So there's been a lot of challenges with issuers of securities, as well as maybe potential companies seeking to come to market in terms of their ability to structure appropriate green instruments as well as sustainable finance instruments. So to cap that challenge, we've been conducting a lot of capacity building around the structures of green bonds as well as sustainable finance products and services in the capital markets. Thank you.
Thanks, Viola. Just on that one, I have a question, which seems to be coming first in Kenya? Is it the innovation or the regulation based on innovations happening around the country? So regulation is trying to create an enabling environment, or is it regulation catching up to innovation?
Thank you very much. I think given that we operate in this current landscape, regulation is trying to catch up with innovation, and that is why regulators within the local capital markets and even the global capital markets have gone ahead to structure innovation offices and regulatory sandboxes so that they are able to learn and adapt their regulations to oncoming innovations. So definitely in this current landscape, regulation is trying to catch up with innovation.
Thank you. So I'd like to go back to the point that I mentioned earlier, which was, the different, where the different continents are, how the continents are in different places with regards to innovating for climate resilience. So how do we build in Africa? How do we build to where Asia or Europe or the Americas are? And so that would be for you, Viola. And then for Musheer, it would be looking at how Asia has been building, what could have been done better in innovation for climate resilience that other countries can learn from. So okay. Yeah, you could go first.
All right, thank you very much, Sephutile. Definitely, in terms of the African continent, we've seen a lot of potential pertaining to sustainable finance, greening of the financial markets, and also putting in place a resilient and climate-friendly financial ecosystem. So if you compare with other global capital markets, there's been a lot of traction, especially around the Europe region, in line with now mainstreaming the SDGs and also combating climate risk and addressing the issues around the climate change. So in the African landscape, we've seen that First Kenyan Capital Markets has had a first mover advantage through the launch of the Econ Green Bond, which was launched in 2019 and also cross-listed in the London Stock Exchange. So in terms of the Kenyan context, we can say that significant progress has been made, first through the development of a legal, policy, and regulatory framework for green bonds and sustainable finance in the capital markets, and also development of the listing and trading rules for green bonds in the Nairobi Securities Exchange. And then we've also seen that the Central Bank of Kenya issued a guidance on climate-related disclosures. And a lot of work has been done pertaining to now green capital markets instruments such as green bonds, sustainable bonds, even putting in place green rates, which we already have about 2 issuers in the Kenyan capital markets, and then also putting in place green funds and sustainable related funds. So in terms of what we could say is the potential of the capital markets, there's still a lot of untapped potential. And that is why we see many development agencies and development finance institutions seeking to come to Africa to finance elements of renewable energy finance, the issues around circular economy and related climate tech initiatives. Thank you.
Musheer, do you remember the question, or do you need me to?
It would be nice if you could just restate it, I think, also from an audience perspective, and I can answer. Yes, please. Yeah.
Okay. So the question was from the African side, what still needs to be done, and from the Asian side, given the steps that that have been taken thus far, what could have been done better or differently, which, in your perspective, in your opinion?
I'm somebody who tries to look forward rather than backward. There are, of course, learnings that are there. So what I would say is, when you're looking at an environment where a large number of countries are emerging countries or developing countries, as is the case in Africa or Latin America, as example, you do have different considerations of growth, right? And you have a focus of bringing people up the social ladder, but also pulling people out of poverty. So your focuses can be different. Because you have to focus on bringing that change, real impact as governments, and as you're driving that. What has changed and what needs to, is translating now is you also need a support for these developing countries from a broader ecosystem of developed economies who have a seriousness about climate change, as we've seen with COP26 and commitments thereof of support for developing economies and emerging economies. What I do now want to see emerging economies and Asian economies, including the big developed economies, doing more so is to not look at long-term commitments are great, like when you're talking about 2050, 2040, all these are great from a net zero targets that everybody has. I want to see more that can be done in the short run, right? How can you make day-to-day life more sustainable? In fact, for a lot of our communities, a way of life used to be very sustainable prior to the technology evolutions in recent years, right? A lot of people were used to having sustainable lives and saving a lot. When I say saving, I'm talking about in general, looking at food safety, all these elements which we now see, like per capita food wastage globally is significantly high right now, right? And that is a sustainability problem. And that actually there is technology now which allows you to track how much food you're eating, how much you're wasting, how restaurants are doing. And we need newer regulations to support reduction of that so that they can be better usage. You have seen places like India and China, and Hong Kong as well, which have banned single-use plastic bags, or there's a charge attached to single-use plastic bags. India has actually banned it for groceries and all the other markets. In Hong Kong, you have to pay an amount to buy a bag. So you do see that these changes are coming about. But what I would want and what lessons are to be learned is you need cooperation all the way from the governments to all startups, right? And there has to be an incentivization of the reality that things are impacting our day-to-day lives. And you are seeing impact of climate change from hot day, record hot days to record flooding or storms across the region. In Asia, you've seen that in Hong Kong, in Japan, in China, and India, all of these have faced extreme weather events. And you're also seeing that if you don't sustain yourself as economies that were largely sustainable and dependent on nature, you will start having impact where you have to spend billions of dollars in recovery, right? Take, for example, when we looked at the hurricane that just struck Florida, that was the strongest hurricane to strike Florida in over 100 years. And they're talking about tens of billions of dollars of damage. And the recovery may take a decade or so. You have seen similar destruction in few other places. So if we are not, the cost of climate change is real. And so being able to pay focus to it today to make these changes in smaller parts that can be implemented immediately rather than waiting for things to change, I think is the main focus. It's a bit philosophical, to be honest, but from a constructive element, I think that's the key element. Is you were driving growth, and that was important. COVID came in and you saw that impact on a lot of economies, but you also saw how nature healed itself, right? Because you had significantly reduced travel, you had significantly reduced activity and pollution, and many ecological systems were regenerated or regenerated, right? So now that we have that opportunity of seeing the impact, we need to act on it and try to do it in the next 10 to 15 years rather than set targets which are 25 years away. That is needed, but in the near term, we need more action, is my opinion. Yeah.
Thank you. Right. I see we have less than 10 minutes remaining, but I think I would like to squeeze in just one final question, which is, we've spoken a lot about, we touched on green bonds, different financial instruments, and that are being used for climate resilience, to enhance climate resilience, or for climate resilience, right? So what systems are you seeing what systems are being put in place in Kenya specifically to guard against greenwashing, which is the negative to the different, to sustainability, to the talk around sustainability? So what systems are currently being put in place? And then in the Asian perspective, what systems have already been put in place, if any, or just briefly.
Okay, thank you very much, Sephutile. So in terms of the Kenyan capital market space, we first ensure that there is a lot of enhanced capacity from both the demand side and supply side stakeholders, that is issuers of securities and investors, on the appropriate structures and also the appropriate products supporting sustainable finance and also green finance. So we've put in place a mechanism to monitor and track disclosures on ESG investments, especially given the growing demand for such investments in the capital market space, and the concerns by issuers and also by investors on the issue of greenwashing. So on an annual basis, CMA conducts an analysis for all the issuers of securities and publishes an annual report that tracks the progress made by issuers on embedding good governance and sustainability practices, with a focus on ESG and climate risk. And then there is also the other issue on ensuring that these issuers embed sustainability reporting in their periodic reports. And then there's also the issue of mainstreaming SDG-related requirements on ESG in the reporting frameworks for issuers of securities. And then, of course, continuous education and capacity building to increase awareness. Thank you.
Thanks, Viola. And supplementing what Viola's already said, the similar things that are taking place in Asia as well, from education, which is a key for any new technology or new frameworks. You do need a lot of education and awareness that is needed for the industry. Secondly, I think I would like to highlight one example of how greenwashing can be mitigated potentially is tracking, right? Tracking is the most important element of greenwashing. Ensuring that the same commitment is not being made to multiple people, right? So, double, triple spending as it were. And number 3 is ensuring that what was promised is delivered. It's not just for the short term, but on the longer term. So the project we're working for the Bank of International Settlements, the BIS Innovation Hub in Hong Kong, in association with UN Climate Change Lab, as well as private partners, including Goldman Sachs, All Infra, Interopera, and some of the other companies, is looking at how we can tokenize carbon credits, but also use use climate data on a real-time basis that can then track the generation of carbon emission and ensure that what was promised by these issuers is delivered to the investors in terms of carbon credits, right? So they have a commitment to deliver a certain amount of carbon credits along with the green bond, which is commensurate to the size of the green bond, which then makes it pertinent that the green bond issuer has to deliver the carbon credit rather than just take the fine if they're not reaching their commitment when it comes to ensuring their green element of their bond, right? So that's something that we are working on as it's a POC, which is a showcase how blockchain and smart contracts and IoT can be deployed by the market at large scale and being built by very well-known organizations, essentially as an innovation to ensure there's a tracking, there is no double spending, there is also an element of the investor ensuring that what they have been promised is delivered, while the crux of it all is, as Viola said, we want to make sure that these projects are implemented and that climate change impact happens, right? The pricing, the value, all of that is secondary. And this is one thing that is happening here. And I'm seeing more usages of innovation for tracking of green finance investments. One last one as an element, we're also seeing more applications looking at tokenization of green bonds, which typically are for accredited investors and have a larger size of subscription going into tens of thousands of dollars, if not hundreds of thousands of dollars. The experiment last year, which was done by the BIS with HKMA, was called Genesis 1, focused on tokenization of retail green bonds that could allow people to invest with as little as 10 euros as such, right? Which can make a big difference because then you have more participants who can support green projects, both at a national and sovereign level, but also at a corporate level. Thank you.
Thank you. I'll give you each 30 seconds for your concluding remarks because we're almost at the end. Yeah.
Okay, thank you very much, Sephutile, and also everyone that has been able to attend this panel session. In terms of maybe a way forward, I think we would like to urge all stakeholders to continue to mainstream sustainable investing and remove barriers to sustainable investment, as well as make climate risks and resilience within the heart of their decision making. Thank you.
Thank you, Sephutile and the Digital Frontiers for having us today. And I've learned a lot listening to Viola as well as your inputs today. My closing remark would be climate change and climate tech is not something just for governments or large corporates or the polluters. It's for us to implement on a day-to-day basis. So trying to make our lives sustainable is going to be quite critical. And that is going to make a big impact in how we achieve sustainable development goals across the landscape, not just only with environment. So thank you once again. And I hope we all can try to live better, sustainable lives. I know 100% isn't possible, whatever we can do. Thank you.
Thank you. Thank you to everyone who's joined us. We have come to the end of our session today, and we hope that you'll continue to join us for in subsequent sessions. Thank you. Bye.